Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 5:30 in New York on Thursday, 24th day of February 2022, and this is the daily report for gold and silver. The Russian invasion into Ukraine last night created strong ripples across multiple financial markets, including gold. The price swing in gold was dramatic, with a low of $1,878.60 and a high of $1,976.50. In other words, a price swing of almost $100 between today's high and low. Currently, we have April futures trading at $1,905.40. That's down $5 on the day, but a huge difference from the $66 gain at the high and $20 plus decline during the lows of the day. Silver also lost approximately 1.25%. It is currently fixed at $24.24. Crude oil had a tremendously volatile day, trading to a high of over $100 per barrel briefly, and then settling up about a percentage point at $93 per barrel. We had the same kind of activity in U.S. equities. We can see that in the Standard & Poor's, which traded to a low of 4,114, closed at 4,288. Without a doubt, market participants moved money into safe haven assets. While gold recovered, the decline in gold is directly attributable to dollar strength. The dollar gained over 1%, with gold dropping by 0.26%, which means that there was continued buying in gold, but that buying was overtaken by dollar strength, and we'll look at that in detail when we pull up some price charts. As we spoke about when we pulled up the price board as well as the opening letter, the range today was extreme and volatile. We can see that as the invasion got underway in Ukraine, it actually took gold to a high of $1,976 and change. And then as the dollar really strengthened, we saw gold decline tremendously, trading to this low of $1,878 before recovering. And as I said, currently we have April futures at $1,905. You can easily see that. To clearly illustrate dollar strength and its influence on gold, I've created a chart that has gold in a line chart format in gold and the dollar in green. We can see that at the initial onset, we had both dollar strength and gold strength. This is when we reached the high in gold. This is that huge spike at just over $1,970. But what we saw was a tremendous spike in gold to the highs of the day. You can see that here. And that was the first point in which we saw a divergence between gold and the dollar, with the dollar strength absolutely taking gold lower, and then the subsequent recovery to current pricing. Clearly, a daily candlestick chart exhibits the day's activity in one concise candlestick. That is this last candlestick here, an extremely wild trading day, to say the least. So where do I believe we could see gold go from here? With today's incredible rise and subsequent fall and recovery, am I still bullish? I am extremely bullish on this market. I believe we are definitely going to see higher pricing ahead, and I am looking to position ourselves from the long side. Our price target was hit very briefly today when market forces took gold below or just to $1,880 per ounce. However, because of the extreme volatility that occurred today, simply put, I wanted to sideline as I let this series of events unfold before we implemented our next trade. The high that came in, as you can see, really occurs above the first level we were looking at yesterday, which was approximately $1,960. Long term, I believe that we could see this rally take gold as high as approximately 2,000 or slightly above. I believe that we are still in a third wave scenario. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.